Spain's housing market is hotter than ever. Prices are climbing fast, sales are breaking records, and everyone's asking the same question. Is this another 2007-style bubble? In this deep dive report, we'll break down what the data really says, the signs of overheating, the reasons for concern, and the key factors that could prevent a full-blown crash. Welcome to Spain Property Watch, your source for real estate insights and housing market trends across Spain. Let's find out, is Spain's housing boom on the edge of a crash, or just another phase in a long expansion? Let's start with the facts. According to CaixaBank's sectoral report from October 2025, Spain's real estate market has been running at full speed. Over the 12 months leading up to June 2025, roughly 700,000 homes were sold across the country. That's nearly a 20% increase year over year. To put that into perspective, these are transaction levels not seen since the peak of the 2000s housing boom. Foreign demand has also been a major driving force. In the first half of 2025 alone, over 50,000 homes were purchased by foreign buyers, making up nearly 14% of total transactions. In total, foreign investors have snapped up more than 133,000 homes in the last 12 months. These buyers aren't just chasing holiday homes. They're looking for stable investments in a country with sunshine, tourism, and growing rental yields. With demand this strong, prices have soared. The MyVal Appraisal Index reported a 9% price increase year over year in the first quarter of 2025, while the INE Housing Price Index showed an even steeper rise, 12.2% in the same period. In nominal terms, average home prices in Spain have now surpassed their 2007 peak. However, when adjusted for inflation, they're still slightly below those pre-crisis highs, meaning the situation isn't identical to the last bubble, but the pace of growth is definitely a warning sign. The second sign of overheating is the persistent shortage of supply. Spain is building more, but not enough. In the 12 months to May 2025, 132,000 new homes were approved for construction. That's an impressive 13% increase from the previous year. Yet it still falls far short of what's needed to meet demand. Since 2021, Spain has accumulated an estimated deficit of more than 500,000 homes. This shortage is putting continuous upward pressure on prices, especially in major cities like Madrid, Barcelona, Valencia, and Malaga. In Madrid alone, average home prices have jumped over 15% year on year, while coastal regions like Alicante and the Balearic Islands are seeing double-digit gains fueled by tourism and foreign demand. Simply put, supply isn't matching population growth or investment demand. When more people chase fewer homes, prices inevitably climb. That's economics 101, and Spain is feeling it hard. Finally, the numbers suggest that Spain's housing market may already be overvalued. Economists at CaixaBank estimate that current home prices are running above long-term fundamentals, such as income growth and construction costs. In other words, houses are getting more expensive faster than people's salaries. A clear red flag. This mismatch is creating affordability challenges, particularly for first-time buyers. Despite rising wages and stronger employment since 2022, many households are being priced out of major cities. When affordability drops, demand can cool sharply, and that's often the trigger for a correction or even a mild crash. So yes, Spain's housing market looks hot. But does that mean it's about to crash? Not necessarily. Compared to the 2007 crisis, today's financial foundations are far healthier. Before the Great Recession, Spain's banks were overexposed to risky construction loans, and households were heavily indebted. This time, household debt levels are lower. Mortgage lending standards are stricter, and banks' capital positions are stronger. In fact, CaixaBank notes that the ratio of temporary employment has dropped dramatically, from roughly 35% in 2007 to under 5% in 2025. More stable jobs mean borrowers can sustain payments even if rates rise. So while the market might slow, a financial meltdown like 2008 is far less likely. The second stabilizing factor is stronger regulation. Spain and the European Central Bank have implemented tighter mortgage rules, stress testing borrowers against interest rate increases. Most new loans are fixed rate, protecting homeowners from sudden payment shocks. Meanwhile, the government has introduced housing supply incentives and affordability programs to increase access to housing for younger buyers. These buffers don't eliminate risk, but they make the system more resilient. Even if prices stagnate or fall slightly, banks and households are better equipped to absorb the impact. Finally, while supply is still tight, there are signs it's improving. The construction sector is expanding again, with cement consumption and employment both rising steadily since 2023. Developers are more cautious than during the last bubble, focusing on sustainable demand instead of speculative building. If this pace continues, the new housing pipeline could gradually reduce pressure on prices in 2026 and 2027, easing the market without triggering a full collapse. So, is Spain's housing market about to crash? The answer depends on your perspective. If you're looking for a repeat of the 2008 crisis, the data says no. Spain's fundamentals are far stronger this time. Banks are healthier, households are less indebted, and the country still faces a major housing shortage. But if you're an investor or homebuyer expecting endless growth, the answer is also no. The current pace of price increases is unsustainable, and the market could easily slow down or correct modestly over the next year. Here's what to watch in 2026. Mortgage rates and credit growth. If lending slows, prices follow. Regional differences, Madrid and Barcelona are high risk, while smaller cities may remain stable. Construction trends. If supply expands too fast, the boom could cool sooner. The key takeaway: Spain's housing market isn't collapsing, but it's walking a fine line between sustained growth and overheating. If you're planning to buy, invest wisely. Check your leverage, stress test your mortgage, and compare local markets carefully. Focus on fundamentals, not fear. This is Spain Property Watch, bringing you weekly updates, data breakdowns, and insights from across Spain's real estate market. Don't forget to like, subscribe, and turn on notifications. Because in real estate, timing is everything.